Good afternoon, this is Brad Dennis with BIS Commodities, giving you a weekly wrap-up for the week of July 18th. For the week in the corn market, we're looking at a lower close, and this is a lower close after we had a sell-off last Friday from the July S&D report. So what are we looking at in corn? We're looking at good weather. We're looking at higher yields out there. Everybody's expecting that August report to show a bump up in yield once they go out and inspect the field. So we're starting to price that in a little bit. I suspect we'll probably put some pressure on that 375 area before the end of the week. The only reason we got to a 395 area this week on corn was basically because of the Malaysian jet that was shot over Ukraine, and we saw a 35-cent jump up in wheat in a matter of 3 minutes. That pulled us up to 95, and now all of a sudden at the end of the day today, we're trading at a 78 level. So a lot of pressure on corn again. Crops look good. Here in Iowa, they look very good. We're still trading a supply issue out here, and that supply continues to get larger. So until you see something that really reverses that, say some new ethanol plants open up, we all of a sudden see a ton of buying in the new crop corn from a big country. Until you see that issue, we're still trading the supply side, and that supply side could get the funds on the short side. If the funds get on the short side, we don't know where the bottom is in this market. So the people that are looking at, 20-30 cent rally post-harvest, yeah, that could happen. Definitely it could happen. But is that coming out of 330 corn or 380 corn? Well, right now it looks like we're heading down that way. Not to say we're going to go to 330, but we're traveling south on prices right now. Bean-wise, beans close on Friday was 85. All right, 1085 or 1075. Excuse me, 1075. This week we closed at around 1085, so a dime higher than that. And what did we see? 1.25 million metric ton of new crop beans being sold to China. That's supporting the market right now. So they're starting to buy into these lower prices, and they should. I mean, we're $2 off. Are they going to get smart, though, and say, hey, all right, do we need to continue buying? Do we want to see where this crop goes to? Now, we all know that in August, that makes the bean crop. But right now, when you're trading on a Friday and you're expecting to see good to excellent ratings on Monday, around 74%, up 2% from where they were last week, which is one of the highest levels we've ever seen on the good to excellent rating this far in the season, you have to be a little bearish from it. So we haven't seen that bullish stance yet. So when you look at the corn and bean crop, everybody's expecting good to excellent ratings going up next Monday. Looking at the weather scenarios, everything looks decent. Once again, though, Sunday is 2 days away. Sunday night, all that can reverse. And if there's some kind of wild card thrown out there, you got to play it. But I would not base my marketing on a possible weather change, because everything's been pretty accurate so far, and everything looks pretty doggone good. Over in the cattle market, cattle firmer this week. Basically, traders were looking for $1 to $2 lower in the cattle market. They traded steady. That kept prices up there. We're still looking at August being a discount to cash, and there should be a little bit of convergence there. We did see, though, this week that the feeder index fell off, and the feeder index was down $2 last time I saw, around that 214 level. So we're backing off that 217 level that we saw earlier, and with it being a cash settled product, you have to take note of that. Over in the S&P market, an up and down area there. There's people that are calling for a bubble. Is there really a bubble out there? Nobody knows yet. We're susceptible to the black swan kind of scenarios, though. That was seen more so from Israelis going into the Gaza Strip than from the Ukraine deal. But I think everybody's kind of taking a look at where earnings are and adjusting from there. Interest rates, you still have both sides chirping about that, but it looks like we're closer to stabilizing things. 2015 for an interest rate hike, maybe happening before that. We'll see. Going to be a very important week next week with PPI and CPI, and be able to see where inflation lies on that. The problem with the PPI and CPI levels, though, is that if we have higher PPI and CPI, we need to see that wage inflation to really spook the Fed into being more aggressive with not having an easy money policy. So those are some things to think about down the road. Corn and beans, you saw it last year. When you look at the ending stocks, as long as the government keeps increasing those ending stocks, you're going to have a negative attitude towards this market. It's when those ending stocks start to go lower that you start basing the market. You start talking about, hey, maybe we need to, maybe we've done as much as we can because we've attracted that new demand, or our supply isn't all that good. So that would be the criteria I'd be looking at on this market. Otherwise, you've got to have a very negative feel for it. Short-term technicals on the beans are lower as well. So just kind of keep in mind, though, that there can be a black swan affair out there, but where's that going to pull us out from? Trend is lower right now, and I think you got to play the trend. So that is a report for the July 18th week, and end of broadcast.